Now it's time for the TaxCast special feature. We forget history and its lessons so quickly. Time and time again, whistleblowers are our most valuable resource. But are we listening to them? Are you sitting comfortably? Once upon a time,
the United States had over 50 years of immense stability in banking with minimal failures, and this was the product of the regulations adopted out of the bitter experience with the Great Depression.
This is William Black, serial whistleblower, former senior US regulator, white-collar criminologist and associate professor of law and economics. That bitter experience with the Great Depression he's talking about led to good, solid legislation that protected the public from the banking sector. Things like the Glass-Steagall Act that separated commercial banking from riskier investment banking. But then this happened.
I have only one thing to say. You turn if you want to. The ladies not for turning.
And this happened.
I would like to have a crusade today to take government off the backs of the great people of this country. Less government and less taxes and more freedom for the people.
Bill Black.
And then they decided that really very substantial deregulation was the answer. And this set the scene for what's now been 30 years of successive crises, starting with the savings and loan debacle, the Enron era scandals, and of course the modern crisis.
The savings and loans scandal in the 1980s was 1/70th the size of the 2008 financial crisis. Just to put that into perspective,
the current crisis is going to cost the nation in lost GDP roughly 160 times more than the savings and loan debacle cost in terms of money from Treasury. So the savings and loan debacle was $150 billion in 1993 dollars. The current crisis is estimated to cost $24.3 trillion by economists. So this is just a spectacularly large number. When the savings and loan debacle started, people assumed that fraud had nothing to do with it. They used very similar language to what they're using now. It was just risk, right? Imprudent risk. People just got wild and crazy. And there were virtually no prosecutions, and there were virtually no serious enforcement actions, certainly not against anybody powerful.
But then Bill Black and his enforcers got busy. We'll have more about that in a minute. Just as with the savings and loan scandal, the 2008 financial crisis was also the result of serial fraud coming from the boardrooms down. Lehman Brothers and other banks were peddling a system of bad loans Bill Black maintains they knew could never be paid back. He calls them liar's loans, basically lending money to people without checking their income and ability to pay it back. Lending so much meant guaranteed record profits in the early years. They borrowed loads of money and grew very fast in what he calls a huge kind of Ponzi scheme. The CEOs got rich. Obviously it couldn't last, but they didn't care, and the government didn't care about stopping them. Here's Bill Black giving testimony to the House Financial Services Committee a few years back.
Lehman was the leading purveyor of liar's loans in the world. Studies on liar's loans show incidence of fraud of 90%. When people cheat, you cannot, as a regulator, continue business as usual. Every day, the exposure of the American people to loss grew by hundreds of millions of dollars on average. All of the major regulatory agencies were complicit. We have a self-fulfilling policy of regulatory failure because of the leadership in this era. Well, what would you do as a regulator if you knew that one of the largest enterprises in the world, when the nation is on the brink of collapse, economic collapse, is engaged in fraud? Would you continue business as usual? That's what was done.
But during his time as a senior regulator, Bill Black certainly did not do business as usual. Despite limitations in terms of staff numbers, political will, he and his team cracked down on banks big time.
We made over 30,000 criminal referrals in just about the key 6 years of the crisis. And that turned out to be what was decisive in changing the FBI and the assistant U.S. attorneys, because we made public how many criminal referrals we had made. And so, pretty soon there were 3,000 criminal referrals and only 2 cases being investigated or prosecuted by the Justice Department. And so reporters started every month to take our latest number and go to the Justice Department and say, okay, it's now up to 4,600 criminal referrals, and there are 4 cases. What in God's name is going on? The Justice Department got sick of being beaten over the head by the media.
So the Justice Department started to prosecute bankers by the hundreds.
They have the best criminal defense lawyers in the world. They will spend money like water to keep the CEO out of prison, especially because typically the bank will pay for that defense. And despite that, we got a 90% conviction rate. Collectively, just in cases designated as major by the Justice Department, we got over 1,000 felony convictions. We got over 800 of them sentenced to prison out of that. So it's the greatest success against elite white-collar criminals in history. And eventually, we had over 3,000 enforcement actions. And these were, unlike the current slap on the wrist, these were really serious things where we were kicking people out of the industry forever. And, of course, we were putting hundreds of institutions in receivership, removing entirely the senior management and putting new honest people in charge.
The Justice Department started to enjoy all the media attention because they were becoming national heroes for taking on the banks. And that made the politicians look bad.
Politicians rushed to give back their political contributions or to donate them to charity that they got from the worst frauds. And so the thing that had been the savings and loan fraudsters' most important weapon, the political contribution, to get that enormous help from these very senior folks, the politicians, suddenly became a liability. And it helped us because all of this moved the story from being a business story, stuck in the interior of the newspaper where no one read it, where the journalists were business journalists who were very hostile to the government and very positive to the crooks at first, and moved it instead, once the politicians attacked us, to the front pages. And then it was a political story. And it's a political story of, in essence, corruption. Powerful politicians coming after government officials who are simply trying to do their job and prevent these frauds.
But then this happened.
My fellow Americans, this victory was more than a victory of party. It was a victory for the people who work hard and play by the rules. A victory for the people who are ready to compete and win in the global economy, but who need a government that offers a hand up, not a handout. That is what we offer, and that is what tomorrow we will begin to work to provide to all of you.
That's when President Clinton got elected. And President Clinton, of course, came in as the leader of the New Democrats. Any of your listeners who are familiar with New Labor under Tony Blair consciously modeled himself on the New Democrats. And they had a fierce ideological commitment to what we call the 3 Ds: deregulation, desupervision, and de facto decriminalization. So the regulation part, deregulation, everyone knows that, but the far more devastating thing is desupervision. Because it doesn't matter what the rules are if you put people in charge who are committed to not enforcing the rules. And that's what the Clinton administration, followed by the second President Bush, did. And they were actually quite explicit that they hated this intense supervision. They hated the enforcement actions. They hated the prosecutions. for their big strategic alliance was not with business in general, but finance in particular. Finance and high tech and Hollywood were the three big ones in terms of industry, but by far the biggest of them was finance. And indeed, finance funded pretty much entirely the New Democrats' superstructures, their organizations, which are called the Democratic Leadership Council. That was almost entirely funded by big finance.
The political influence of the big banks has escalated, so has their consolidation of the market. Back in the 1990s, the top four banks had a 15% market share. Now they have a 50% market share. Their lobbying power is huge. The House Financial Services Committee you heard Bill Black giving his testimony to earlier is the committee many politicians dream of getting onto. Big Finance showers committee members with so many campaign donations they could take baths in it. So what would you do as a former senior regulator who's seen it all and whose warnings aren't being heard about what needs to be done to stop the next financial crisis and bring law and order back to Wall Street? Well, now Bill's got together with other whistleblowers and created Bank Whistleblowers United. So, Bill, you set up Bank Whistleblowers United. Why now?
Because we've given up on everything else. We've tried and tried and tried for, decades, literally, to get these views across. I've testified 5 times in front of Congress. We're very experienced folks from banking and regulation. So we're going to try to go over the heads to the American people.
And you've put together a 60-day plan.
We have deliberately shaped it so that it requires no new legislation and no new regulations. So no candidate and no president of the United States, President Obama, could implement what we proposed immediately. But nobody can hide and say, well, hey, I would have loved to have done it, but the other party controlled Congress, so I couldn't get it adopted. No, we picked things you can do entirely under your presidential power. And you can do them really quickly within 60 days. You can't hide anymore. Are you for restoring the rule of law or not? Are you for getting rid of the so-called too big to fail institutions that pose a global systemic risk or not? Are you for stopping taking money from financial felons or not?
Right, and in challenging politicians not to take campaign donations from financial felons, you're talking about them rejecting big money from most of the big banks. Have you had any response yet from any of the candidates on whether they'd be willing to refuse those campaign contributions?
We have not had any official response, and this remains a major driver of the problem, these contributions. Both parties have been competing for laxity, and then there's been this enormous international competition where the City of London won the race to the bottom, and which is why the City of London is the financial cesspool of the world. But Wall Street was only edged out at the wire. So both of them ended up with almost a total destruction of effective regulation, effective supervision, and almost the complete death of any criminal responsibility for their actions. And the current crisis is, in many ways, the savings and loan crisis and aspects of the Enron era scandals replayed. We have bigger systemically dangerous institutions than before the crisis. Indeed, we can't even muster the honesty to call them systemically dangerous. They're actually called in the United States systemically important, like they should get a gold star.
It's not that legislation wouldn't be a good thing to have, but during Bill Black's time, public servants broke a raging fraud epidemic without it, since politicians wouldn't reform anything. The Bank Whistleblowers United 60-day plan is fast-acting. They're proposing things like no more deferred prosecution agreements with elite white-collar criminals, reassigning 500 FBI agents to the white-collar crime section, employing thousands more enforcers and giving them more specialised training, stopping the revolving door conflict of interest problem with special contracts for new employees, honouring whistleblowers for their service to the nation, imposing minimum capital requirements on all systemically dangerous institutions, stopping the race to the bottom on regulation between nations, particularly the City of London, which seems to have won anyway when it comes to the facilitation of sleaze as active government policy. It's not rocket science.
We're trying to do three things. We're trying to get President Obama to adopt these reforms now, even though we think the chance of that closely approaches zero. We're trying to get candidates to adopt those principles and pledge they'll implement it. We think there's some chance Senator Sanders might do that. And if he were to do that, Hillary Clinton, we think there'd be an excellent chance she would sign on as well. But the third thing is, there was a famous investigation in the United States by Ferdinand Pecora in the Great Depression that led to the adoption of the Glass-Steagall legislation when he documented the fraud schemes. We want that done again, and no one has been willing to hold that kind of hearing in which we will look at 21 institutions, all of which did these liar's loans, and examine whether they in fact were fraud schemes, as we believe. So we hope to take that on and show with a tiny, tiny, tiny group with no budget, with all of us having day jobs, that we can do more than the entire Justice Department and FBI have done in revealing the nature of these fraud epidemics. If you gain a competitive advantage by cheating, then markets become perverse, and bad ethics drives good ethics out of the marketplace. It hurts not only the consumer, but it hurts honest businesses. They are driven out of business. Then you are destroying your economy and your nation and producing not just crony capitalism, but inherently corrupt crony capitalism. It remains true as we speak that not a single banking leader of the three fraud epidemics that drove the U.S. financial crisis and much of the global financial crisis has been prosecuted for leading those fraud schemes. Not one.
The last crisis still isn't over, and the next one is on its way. Because of banking fraud, millions of jobs were wiped out and people lost their homes. Government failed to re-regulate finance or even to ensure strong enforcement of the rules we still have. How much is the next crisis going to cost us if we don't reform political donations? In the United Kingdom recently, one senior regulator told Parliament he wasn't sure Britain would be able to foot the bill for bailouts for the next time. You can read more about Bank Whistleblowers United's 60-day plan on www.neweconomicperspectives.org. And at this critical moment in history, thousands have pledged to march and take part in a mass non-violent action in Washington in April, demanding an end to the corruption of big money in politics. It's called Democracy Spring. You can check that out on www.democracyspring.org. You've been listening to the Taxcast, and we'll be back next month.